Hello everyone, hello Shakthi, and this is us, and we're gonna talk about stocks analytics platform that we are developing, and today is a new company to discuss. Guess which company it is?
Nike.
Cool short. What do you think?
Yep.
I think it's amazing. If you look like this, I'm like a business lady.
Yeah.
And if you look like this, I'm like an athlete.
Awesome.
Maybe not exactly. It's not. Yeah. So this is a cool company which I really love, and I bought this with some Nike stocks.
Cool. How many Nike stocks?
9.
9. Okay. That's a good start.
Yeah. I just went to Nike shop and I just said, okay, I want this, that, and could you please give me 9 shares of
Okay.
yours?
Now you're a owner, business owner
Yeah,
of Nike. So
exactly. Well, why did I buy it? I really like the company and I like what they are doing. A couple of years ago, they made a few strategic mistakes, but currently they are recovering. And I thought that it might be an opportunity to get not just Nike shoes, but Nike stocks.
yeah.
That's one thing. Second thing, and this is quite important for me, that's sustainable development, and Nike is quite serious about that. Then I'm also a good student and listen to you carefully about all your store valuation. Used our fair value estimator, and I found that company is close to fair value, maybe even slightly undervalued if you are bullish on growth. What do you think?
Yeah. Nike currently has an innovation problem. Their products are not as innovative as the competitors that they.
This
Yeah. So,
is
so
innovative. I think it's
I'm
really.
talking about the shoes, right? So these are apparel, right? So this is secondary. Their main business is the shoes. Recently, there have been a lot of small competitors who are trying to eat at the market share of Nike, and their products seem to be much better. I myself use Brooks. When I have the choice to buy between Brooks and Nike, I go with Brooks, right? I know Nike is a great brand, but still, I have tried both, and I still love Brooks, right? So Nike has to come up with something which will match their brand value. They have a great brand, but if they can match the product with the brand, nobody can stop them, right? So I think the management has to come up with some ideas, bring some smart people together, and start innovating and creating great products, great shoes that everyone would want to buy.
Should we look at their financials?
Yeah. So let me share my screen.
While you're sharing your screen, I want to remind everyone, please like, share, and subscribe because it will help us a lot.
Okay. So Nike.
Yeah.
So what do we see for Nike? So Nike has a market cap of 116 billion. Their fair valuation based on our risk assumptions is just 27, which is much lower than the current stock price. But we have a growth insight here, which says if they grow at around 4% now for the next 5 years and also beyond 5 years, for a discount rate of 8%, which is the expected future returns, we might be able to match with the current stock price. So the market has priced it accordingly for a 8% return. But we should also take into consideration that Nike pays a growing dividend, and the dividend yield is at 2% as of now. And we have added this new feature of the 5-year CAGR and 10-year CAGR. And as you can see, for the last 10 years, the dividends have been growing more than 10%, which is awesome, right? And now, if they continue to grow at that rate, this 2% yield is excellent. And assuming that they do that with the 8% return and this 2%, you might end up with 10% returns. So that's the current financial situation. But if we look at recent revenue statements, they haven't been doing well. The revenue has been going down. It was 50 billion and it went down to 46. We have to wait and see what happens in the future. But if they continue to lose money like this, the stock is prone to go down. So there needs to be a turnaround, and soon, for Nike, for the stock to come back up. And I believe the cash flows are also not looking good. There has been negative cash flow. Yeah, what is your thought?
My third, please, please, please do something. I have my
Yeah,
money with you. Guys,
exactly.
you've mentioned that they keep growing the dividends. This is quite a positive sign.
Yeah, so the stock was at 170 in 2021, and it has crashed to 78. It was even worse before. So even though the management might be bullish, the numbers must be able to support their dividends, right? So if they're not making enough money, if the cash flow is not positive in the upcoming years, they may not be able to maintain that 10% dividend growth, and that could be another problem. So yeah, we can just hope that they come out with some innovative products and increase their revenue soon enough. They have a great brand, and I believe the management can do something to justify that brand value.
What about 10 years? I'm just wondering if you look at 10 years.
Well, it's not too bad. Uh,
The hype was that's so interesting. Why they were so high after like straight away after COVID.
yeah, that's
Oh,
because they invested a lot in technology. When it was COVID, nobody went to the stores, so they assumed that in the future people would buy their shoes from online portals. So they built an extraordinary online portal which was specific for Nike. If you go to the stores, you would find Nike and other brands today because during this COVID time, Nike pulled out their
yeah.
deals with some of the retail stores, and that gave the opportunity for all the small players to come in, which actually backfired for Nike because now you see these small players bringing out great products, and people have seen that in the stores after COVID, and that's a negative for Nike, and that's exactly why they'll have to improve their product innovation. It's also good because Nike would have been complacent if this didn't happen. Now, because of the competitors, Nike will be thinking harder and coming up with better solutions in the future. Competition is actually good. It's not going to affect Nike in the long run. It's only going to make them better. This 60% growth in the last 10 years has a lot of dividends in it because our chart has dividend adjusted data. If you remove the
Yeah.
dividends, it's even worse.
Yeah, I see, I see. Well, let's go to sustainability perception rating, and
Yes.
here, what can I say? It's a great company, and I'm still bullish on that company because they do have resources to invest in ESG, and I believe that future for sustainability. Okay, what do they do? Highlights. Move to zero. This is about circular materials, circular economy, and better reporting. Overall, very low ESG risk,
Yeah.
and they do a lot of great stuff. So
Hmm.
that's what I
That's what it is.
maybe their cash flow a little bit going down, but they still have some money to
Hmm.
invest in diversity and inclusion initiatives. They have invested $125 million.
Oh.
There are some minor problems regarding tax avoidance and concerns regarding pollution. But overall, they are great. This is super positive.
Do you see any scope for change here?
Industry. What do you think about industry, innovation, and infrastructure? Do you think
That's
they're
my. They have a problem with innovation. That's the whole point here, right? So I'm keeping it at 5.
all right? Let's keep it at five.
That's what
Sandy.
we have. We have 52 for environment, 59 for social, and 62 for governance. It could be a little bit better, but it's not bad either because everything is above 50 or close to 60, right? And which means there are no major red flags when it comes to ESG rating for this company.
Yeah. All right. That's great. I think we have a request to talk about Okta and Berkshire. That is an exciting one.
Yeah.
Shakti, do you have something on your mind you would like to discuss?
Yeah, I was thinking about Eleven's Health. I worked there for a long time, and I think you own the shares also. We can discuss that.
Yes,
And yeah,
yes. All right. So coming soon, and have a good rest of your day, night, or where you are. Bye.